Australia is a really attractive destination for foreign investment because it's got low sovereign risk. It's a highly regulated market. There's a low exchange rate at the moment, which makes it even more attractive. We see something like, on average, 60 billion Australian dollars worth of transactions each year. That's been the average over the last 5 years. And the private treaty M&A market is of a similar size. Transaction completion risk continues to be a major consideration in Australia. Approximately 80% of announced transactions complete, and that's historically over the last 20 to 30 years a lower number than you might have seen previously. So people are making sure that when they transact, they do everything they can to improve the probability of success. That includes a significant component of all cash or cash equivalent offers, which is something like 75% of the transactions we're seeing. Use of takeovers, which is a fast way to transact. A small number of hostile deals, less than 15% of deals announced are hostile. And we see high premiums being offered. We're seeing something like 50% premiums being offered, which is much higher than a historic average of 30%. Australia tends to be a natural place for buyers to look to replenish finite resources. It is an abundant region for natural resources, and the mining and energy markets are a really important part of the Australian economy. I would say 50% of the transactions we've seen announced in the last 12 months have had an offshore buyer, and a material component of those have been in that energy and resources space. It's a stable environment, low sovereign risk, relatively weak currency at the moment, and we're seeing a lot of cross-border activity into our market.